Excellent, excellent. Thank you. Well, welcome everybody. Like I said, my name is Jeff and I'm with TurboTax. And this is the TurboTax Presents Stash Investor Tips and Guidance. Welcome. I'm going to just jump right into this presentation. The agenda topics for today, I'm going to go over this pretty quick and then we're going to dive deeper as we move through the slides. We'll be talking about being an investor. We'll be talking about tax forms and stash tax summary, investments and retirement, stimulus checks and advanced child tax credit, cryptocurrency, kind of a hot topic right now, TurboTax imports and special offers, and then a wrap up. So allow me to introduce my team. So yes, I'm the guy on the far left. My name is Jeff, and I'm the guy with the Hawaiian shirt on there. It looks like I got a sunburn. I own my own tax practice. I have been with Intuit for almost 10 years now, and I'm a CPA here in San Diego, California, where it's hot and sunny today. I couldn't resist. And to my right is Lynn, and Lynn is also a CPA. She has her own practice. She's been with Intuit for over 5 years. And next to Lynn is Eric. And if I tease Eric, you'll understand it's all in good fun. He's a friend of mine. Eric has his high school picture on there, and he is a CPA. He has his own practice, and he's been with Intuit for over 4 years. And then Erin on the far right. Now, Erin is not a tax professional, but she's actually our fearless leader. She is the one that put this webinar together. She is our liaison with our partners and friends over at Stash. She's been with Intuit for over 7 years. So let me advance this slide. Now, asking questions. Now, we have already, curated this presentation to answer the top questions from stashers like you. But if you'd like to ask a question, just type your question into the Q&A box there, tab send, and if one of our panelists, if they can reply, you'll see the reply in the Q&A window. The TurboTax team will also group similar questions together and answer them out loud at the end of the presentation. So we won't be doing Q&A during the presentation. My hope is that we do indeed answer most all of your questions during the presentation, and so save those for the end. And I think that my panelists, at least Eric and Lynn, will be trying to answer your questions on the fly in the chat window. The only thing I would request, please make your questions general today. Generalize your questions so they're nothing specific about you or a family or a friend, but something that maybe when we answer them, they benefit the entire group. And yes, always some admin, right? I got a little friendly disclaimer I need to say here. So Stash does not offer tax services, and this webinar should not be construed as tax advice from Stash. Being an investor, let's just jump right in here. It's a great way to plan and save for a secure retirement. And we'll guide you through, how this can impact your taxes. Just remember, investing little by little consistently over time, that is definitely the secret sauce. My apologies for talking really quick. If it sounds like I have 3 cups of coffee in me, it's only because I do have 3 cups of coffee in me, and we have a lot to cover here. So being an investor, so investing in savings for the long term can help you plan for the future, but this can all lead to tax implications. Not to worry, TurboTax experts, are here to help. Different types of tax treatments. Let's talk about that a little more in detail. Example, capital gains. So what are capital gains and losses? Eric, can I turn to you to help me out to expand on that, please?
Yeah, sure. So you're going to have a capital gain or loss anytime you sell a capital asset. Basically, a capital asset for our purposes is going to be stocks, bonds, or even crypto can count as a capital asset. So capital gains are good. No one wants to lose money.
Okay, gotcha. Thank you, Eric. I have people ask me sometimes, hey, Jeff, what's the difference between long-term and short-term capital gains and losses? And the answer is pretty easy. It's 1 year. So, if you sell one of your capital assets, like Eric said, let's say a stock, in less than a year, that's going to be considered a short-term capital gain or short-term capital loss. And this actually, avails itself to a planning opportunity. Think about it. Let's just say you want to sell a stock, you're 11 and a half months, holding period. You're going to sell it for a gain. I would hope that the market wouldn't go down in the next week or two, of course, and you lose your gains. But clearly, if you can just hold that for over a year, and then you sell it, you'll get the preferential long-term capital gain treatment. So be mindful of that. The other question that I get from time to time is, do I have to report anything on my tax return when I purchase a stock or other capital asset? And the answer is no. It's clearly no. I want you all to take away the fact that purchasing something does not trigger a tax event. It's when you sell something that triggers that taxable event. And the cool thing here is, TurboTax will capture your investment activities for the year and guide you through step by step and help you enter the data. People also ask me from time to time, hey, Jeff, what is a wash sale and what are wash sale rules? So Lynn, you're up next.
Yeah, so a wash sale rule, it was actually designed to discourage people from selling securities at a loss just to claim a tax benefit and then turn around and immediately buy that same security again. So if an investment is sold at a loss and repurchased within 30 days, that initial loss cannot be claimed for tax purposes. Investors need to wait at least 31 days before repurchasing that same investment.
Okay, I got you. Thanks, Lynn. So tax forms for investors. Let's talk about that a little bit. Selling investments or earning interest or dividends can often have tax implications. So let's talk about a few of the forms that you may receive from Stash. So I listed them here, but we're going to go over them one by one. A 1099-B, a 1099 int for interest, a 1099 div for dividend, and a 1099-R for retirement. So we'll go over those one by one in a little more detail here. Here we go. So, Aaron, finding your Stash form, your forms in Stash, can you kind of elaborate on that for us a little bit?
Yeah, sure, Jeff. Finding your forms in Stash is super easy. Every year, they'll of course send you an email notification when your forms are ready, and you can just access that through your app online. But to find them in your app, all you need to do is go to that home screen, and up in that top left-hand corner, you're going to see your initials. So just kind of go ahead and click on that, and then it'll take you to your portfolio and then the document section. And then you just look to find that particular document or investment form that you're looking for. Process is very similar on the web. If you choose to go that way versus the app, you would just click your name in the upper right-hand corner, select statements and tax documents from the menu on the left, and then just navigate to find that particular form.
Dang. All right. Thank you, Aaron. Wow. That's excellent tool from Stash. Thank you, Stash, for that. I'm going to talk a little bit about here the 1099-B. Actually, Lynn, I'm going to make you talk about it all. I am not going to steal your thunder. It's all yours. 1099-B.
No. Let me tell you about the 1099-B. Now, this will summarize the proceeds of all of your sales transactions, and you'll receive those from anybody who handled your trades, like Stash. These values must be reported to the IRS when you file your taxes. Now, the TurboTax program will walk you through step by step and show you how to enter the sale of your investments. Unlike your W-2s, which were due to be distributed by January 31st, 1099-Bs are not due until February 15th. So if you don't have them yet, they're not late. And if you didn't sell any investments in this tax year, you won't receive a form.
I got you. Thank you, Lynn. I am moving on to 1099 int for interest income. And the 1099 int is provided for stashers who earn more than $10 or more, and that was not previously displayed in the 1099-B. If you receive less than $10 of interest, or the interest was displayed on your 1099-B, it's likely that you will not be receiving this form. So it might be hard to see this image on the screen here, but you have box number 1, and it says interest income. And so that right there is going to be the amount that you're going to report on your tax return for your interest income from the 1099 int. This next form is the 1099 div, and it covers dividends and distributions. So, Eric, a lot of times people ask about this form. There's two boxes you can see here. There's total ordinary dividends in box 1A, and then there's qualified dividends in box 1B. Eric, would you mind expanding on that for us, please?
Yeah, sure. I won't go into the difference as to what makes a dividend ordinary versus qualified, but for taxation purposes, the ordinary dividends are going to be taxed at your ordinary income rate, and the qualified dividends will be taxed at the preferable long-term capital gains rate, which is much lower. So qualified dividends are good.
I got you. Thank you, Eric. I am moving on here, the 1099-R. And Lynn, you want to take it for the 1099-R?
Sure. The 1099-R is the form that you receive for any distribution of $10 or more from a retirement plan like an IRA. So if you take money out of a pension plan, whether you're of retirement age or not, that form is going to get reported. Now, there are some things that are rather unique this year. The CARES Act, there were provisions in 2020 due to the coronavirus, but there's some components that can affect your 2021 tax return. Distributions from inherited IRAs were not required in 2020. And so if you had an inherited retirement, you were required to take distributions within 5 years. You actually got 6 years. So you may be looking for a 1099-R for any distribution you received in 2021. And in addition, if you took a coronavirus related distribution in 2020, 2 years ago now, you had the option to report that income over a 3-year period. So a third of it is actually due to be reported this year. And TurboTax has you covered because it'll include Form 8915F to record that additional income.
Gotcha. Thank you, Lynn. I'm on to investments. Financial planning is important. Investing helps you long-term savings, and the you start, the better. Just remember, a little can go a long way. Now, it's recommended that you start saving as early as you can. In your 20s or as early as possible. And we'll get into the why that's important in a minute here. So start saving early. The power of the compounding interest. I mean, that should be like the seventh wonder of the world, compounding interest. The earlier you begin stashing money away, no pun intended, or maybe pun intended, the more you will accumulate over time. The advantage of the compound, the money that you start savings in your 20s will start accruing interest. And then that interest will accrue interest on its own, leading to exponential growth in your account. But not to worry, whenever you start, it's better late than never. And people often ask me, they go, Jeff, well, the money that I have in my 401k or the money that I have in my IRA, how is that invested? That's really a good question. And you should be aware of that. You should be knowledgeable and comfortable with how your money is being invested. Now, typically, let's start talking first about a 401k. Now, be mindful that that is through your employer. A 401k is not something that you can just run to a bank or some other financial institution and open a 401k. That's through your employer. And typically what they do is they give you, choices. They give you options, maybe, half a dozen or a dozen different mutual funds, and you select the mix. You could have 100% in one, you could have 20% in each in 5. It's up to you. And typically they range in from very conservative, to maybe ones that produce a higher rate of return, but they're more risky. And you should all be aware that your tolerance for risk usually depends on how old you are. Somebody in their 20s, if they lost some money, they got plenty of time to recover it. If you're getting close to retirement, you'll probably invest in something more conservative. You don't want to risk the principal, you don't want to risk your nest egg, but want a conservative return. As far as IRAs and how IRAs are invested, you want to look for the ones that are self-driven. Okay, that basically means that you decide how the money in your IRA is going to be invested. You can buy and sell stock within your sheltered account. They call these these tax deferred or tax protected accounts sheltered accounts. And keep in mind, you could buy and sell, you could have gains or losses within the IRA, and it's not going to trigger a taxable event. The taxable event for your IRAs, or your 401ks is when you actually take money out. So those are called distributions. So I am moving on to the next slide, talking about retirement. Retirement planning can help you meet long-term growth, and there's several ways you can get tax breaks now and in the future. And I want to share this statistic with you, and it's a sad statistic, but it's very important because, let me just read it to you. People have their whole life to plan for retirement, and yet statistics show that 64% of Americans are now expected to retire with less than $10,000 in their retirement savings account. That's way, way too low. So, not today, not with this group, not on our watch. We're going to give you some ideas, some vehicles, some thoughts on how not to be part of that statistic, and we'll come back to that. I am moving on to traditional IRAs versus Roth IRAs. So look at it this way. Traditional IRA, tax break now. Roth IRA, tax break later. So with the traditional IRA, you get a tax break upfront, and you pay no taxes on the money that you're putting into your account until you withdraw it. Roth IRA, very different. The money you deposit here, you've already paid taxes on it. So you're not getting a tax break when you put it in, but when you take the money out, including all the gain, and that's a big, big deal because the gain will be more than the principal. After you're 59 and a half, you won't pay any taxes on it. I'll talk more about that later. Some people ask me the question, Jeff, can I withdraw my money from my 401k or my IRA anytime I want? Well, the short answer is yes. Yes, you can. It's your money. But I want you to be mindful that there's penalties attached. There's federal penalties, there's state penalties usually, states vary. But if you take money out of that account before you're 59 and a half, that's called a premature distribution. And not only will you pay taxes on it taken out when you're taking it out, but you'll pay penalties on it for taking it out early. People also ask me, when should I start saving for retirement? And I know we're short on time, so I can't spend a lot of time with this example. I love the example, but also I'll give you the short version of it. They have some models of some analysis done, and I encourage you to look at it, where one person started putting $2,000 a month away in their 20s, and they did it till their age 27 and then stopped. And a second person starts putting money away when they turn 28 and do it all the way till they're 65. And the moral of the story is when they get back together when they're 65, the one that started earlier, believe it or not, and did it for 7 years and then stopped, had more money than the person that started later. So we don't have time to go into those details, but just keep in mind that speaks loudly to the power of the compounding of interest. One thing I want to also share with you is that you can easily open a retirement account in the Stash app. Okay, just click on Invest. Okay, and in the lower navigation, then click Retirement tab to easily get started. So be aware that our friends over there at Stash are making it really easy for you to open up and fund a retirement plan, which I encourage you to do sooner versus later. We're going to jump now into new and the latest tax law changes. So the American Rescue Plan Act of 2021, also called ARP, I want to talk about two areas: the third stimulus payment that was approved and the advanced child tax credit payment. So Eric, if you don't mind, would you please talk to us a little bit about the stimulus payments?
Yeah, sure. So they approved the third stimulus payment in March. It was up to $1,400 per person spouse, or dependent. So it was pretty good. It's not taxable. You do want to keep track of it and report it. If you didn't get the full 1,400 and your income dropped, you could get the remainder as a credit against your tax in 2021.
Okay, gotcha. Thank you. And Lynn, advanced child care payments?
Sure, though. So the advanced child tax credit payments went out monthly during 2021. It's really important to file an accurate return. So to help with that, the IRS is sending out letter 6419. They started going out after January 31st. They're still going out now. Now, if you haven't received the letter, or if you just want to double check your records, that information is also available in your IRS online account.
Okay, got it. Thank you. Thank you. You guys are great. Let's talk a little bit more about the stimulus payments, if you don't mind. Eric, are you with us?
I am. So
Go ahead.
yeah, it's there. They were all good. You know, as long as you got them, you want to make sure you report them. Again, they're not taxable.
Okay, I got you. I got you. And Lynn, can you expand a little bit more on the advanced child tax credits?
Sure. Now, the disbursement of those payments actually began in July, and they came out on a monthly basis. So that was through December 2021. Now, generally, the amount that you receive was based on information in your 2019 or your 2020 federal tax return. But the good news is, if you were eligible for the child tax credit, but you didn't get any advance payments, you can claim the full amount when you file your tax return during this season.
Okay, okay, very cool. Thank you, Lynn. So, you know, getting exposure to the digital currency, cryptocurrency, you know, I know we cannot do a deep dive on cryptocurrency, but Lynn, can maybe at a high level, can you help us out here?
Sure thing. So cryptocurrency, it's really a hot topic in investing. The term itself refers to a type of digital asset that can be used to buy goods and services, although many people invest in cryptocurrency similarly to investing in shares of stock. So part of its appeal is it's a decentralized medium of exchange. That means it operates without the involvement of banks, financial institutions, or even central authorities. Now, it's secure. Transactions are encrypted with a special computer code. It's recorded on something called a blockchain. It's a public digital ledger in which every new entry must be reviewed and approved by all the network members.
I got you. I got you. Thank you, Lynn. I am on to understanding cryptocurrency a little bit more. Aaron, can you help us out?
Yeah, and thanks, Jeff. And you know what? I just shared in the chat a link to a really great article on the prior slide that Lynn was speaking to. So feel free to check that out at your leisure. It's from TurboTax, but great education and content for you. But just wanted to let you know that in January, just this past year, Stash brought crypto to your smart portfolio so you can get exposure to crypto the smart way. So that means if you already have a Stash smart portfolio, then you already have access to it. But if you're interested in gaining exposure to crypto this year or any time, the easiest way to do that is by opening a smart portfolio with Stash. You can find that smart portfolio in the app by clicking Invest in the bottom navigation, and then there'll be a smart portfolio tile on your screen. But just remember that this year, TurboTax Premier will guide you through, we hope that you use TurboTax this year, and then it will guide you through all your investments. And but if you need extra help at any time, you can always use TurboTax Live, which is unlimited tax advice and guidance while you're using the TurboTax product. That's also available in the top right-hand corner during tax prep.
Excellent. Thank you, Aaron. And this one is also for you. So TurboTax can help.
Yeah, and as I mentioned, we've got help in many ways, but our product is very easy to use. But just so you know that new this year, we have partnered with Stash so you can easily import your tax forms. And that means that you just go right into, if you want to type in the search function, the name of your tax form will drop you right to that particular area where you can easily choose Stash as your financial institution and will automatically import that tax form for you. If you don't want to do the automatic import, you can definitely choose to type it in yourself too, but we'll make sure we check for accuracy.
Yeah, and I should say importing is really, really cool. And you don't have to worry about the accuracy of being fat fingered when you type it in yourself. So
right, good call.
The import feature, it's beautiful. I am on to, saving time and money with TurboTax. Aaron, we're back to you again.
Yeah, and we kind of hit a lot on the import, not only saving time, but also one other great thing that we partner with Stash with is to save you a little bit of extra money this year too. So I'll pop another link in the chat where you can get access to TurboTax directly through the Stash microsite. But you can save up to $20 on any of your TurboTax products. And one other call that I want to make too, that hopefully you'll get a big, tax refund this year. A great way to reinvest is to put that money back into your Stash account too. And we also make that super easy for you. So just keep your account information handy when you get to the end of your tax prep, and we'll manage all that for you as well.
Perfect. Perfect. Thank you, Aaron. Well, this looks like it's up to me to wrap us up. So as I mentioned earlier, I do not want anybody to be part of that statistic. You need to start planning now for your retirement. If it's not in your 20s, it can be in your 30s, be in your 40s, just start doing it. And I love the out of sight, out of mind way of investing little by little. That's why 401ks to your employer are so great, because they take it out, you get a tax deduction for it. You don't see it on your net check, you don't spend it. But this is what I would like to do. This is what I call my random act of kindness for all of you. I'd like everybody here, do me a favor, raise your hand if you can spare $20 a week. Everybody. Aaron, I see you. Eric. All right. The lady in the back row right there with the red dress on, raise your hand. Okay. Come on, let's face it. Everybody can spare $20 a week. And this is what I'd like you to do. I'd like you to put it into a Roth IRA, $20 a week, just every week, all the way through retirement. This is going to be your retirement, your nest egg. Now, I know a lot of you out there, you're math whizzes, you're really smart, and you've already done some calculations, and you're thinking, wait a minute here, Jeff, you take $20 a week, 52 weeks in a year, that's $1,040 a year, 35 years, 35,000. Come on, Jeff, that's not much of a nest egg for retirement. And I would have to tell you, you know what? That's not correct. That money will be worth over $250,000 when you retire. And the cool thing is, since you put it into a Roth, the money that you're taking out, the principal and all the gain will be tax-free to you as you take it out. So this is what I'd like you to do. You're retired, you're down there in the Caribbean, you're sitting in your lounge chair and you got your toes in the warm sand, you got your umbrella drink in your hand. And I want you to think back about today. Think back about your friends at TurboTax, your friends at Stash, and then pay it forward. It'll be your random act of kindness. Tell a young person to do the exact same thing. The second thing I'd like you to do, equally important, is order yourself another umbrella drink because you deserve it. That's all I had. Aaron, back to you. Or we have time for some Q&A?
Yeah, we've got a couple Q&A that we're answering directly through the function in Zoom. So hopefully your answers are there, and we'll do our best to address those. And we'll also hang on the line for a few minutes to make sure we try to answer those for you as well. But yeah, just a couple questions and some themes that we're seeing. Friendly reminder, when is the latest I can fund my IRA?
You know what, I can take that one, and Eric and Lynn, if you want to add on, please feel free to pile on. The cool thing about funding your IRA is there's a window of opportunity that not a lot of people even know about. You want to put money in for tax year 2021, but here we are in 2022, right? The rule is that you can fund for last year all the way up into the due date of the return. So this year it's going to be April 18th. It happens to fall on a Monday, April 18th. So you put the money in, okay, you designate it for last year, and you'll get a deduction on your tax return that might even, believe it or not, it might even create a refund that'll help you go fund your IRA. Back to you, Erin.
All right, great answer. Thanks, Jeff. Yeah, here's another one. Here we go. Let's see here. We talked about that. Ooh, here's a good one because it's one of the forms we didn't talk about. What if I received a consolidated 1099 from Stash? What does that mean? How
about Lynn? Can you field that question for us?
Absolutely. It's very possible that you received different types of income in your Stash account. Could be interest, could be dividends, could be the proceeds from the sale of some of your investments. And instead of having to get 3 different forms, it's all on that consolidated form. So all of that information is included, and you just have one statement. It'll be multiple pages that has everything that you need to file your tax return.
Okay, got it. Got it. Aaron, back to
Awesome.
you.
Thanks. Yeah, and here's another one. It's more so for TurboTax. How do I enter my stash income or investments in TurboTax? I'll take that one. TurboTax is super easy to use and literally asks you very simple questions and will guide you to the right spot for that. But if you're ever just receiving a form and you don't know where it goes inside of TurboTax, there's a really easy search function in the top right-hand corner. You can type in the word 1099, for example, and it will actually take you right to the interview experience inside of TurboTax. So we make it very easy for you to get those forms in there that you need.
Excellent.
Don't forget about import this year, as we talked about a few times. And then just one other question, are stash investors taxed on dividends? And I think we talked a little bit about this, but maybe a quick refresher will be just kind of the limits and things would be great to recap on.
Sure. Eric, you want to take that one?
Yeah, sure. So as you're paid dividends, you are required to pay tax on them, and they'll be reported to you on the 1099 DIV form if they're reportable.
Yep. Absolutely.
And then one last one. I sold an investment for a loss, but I don't remember repurchasing anything. How could I end up with a wash sale?
I can help with that one. If you use an automatic investment strategy, like reinvesting the dividends, you could actually inadvertently end up with a wash sale. So you want to rely on your 1099-B or that consolidated statement, and it's going to indicate for you if any of your transactions meet the criteria.
Awesome. Thanks, Lynn. And just one more here. This one's more about general tax breaks. This is definitely investment focused for all you stashers out there, but just, kind of give me, what are some other big tax breaks in general that I can look forward to outside of, the child tax care credit and things of that nature? Anything else big that we can count on?
Lynn, you want to take that one?
Wow, that's a
loaded question, Lynn. It sure is.
It just is. It just is. And so, you have your standard deduction, which is substantially larger the last few years, but it's a great recommendation to always take a look at all of your deductions to see if you happen to exceed that. So that includes things like paying taxes, your local taxes, property taxes, the interest on your mortgage. But I would take a look at that Schedule A and see if you actually have enough that you can itemize this year.
Good call. I'll be doing the same.
Where mind goes, and Eric, feel free to add to this, is that I look at the age of the person, like college students. My mind goes to educational credits. And as we always said earlier, you could do your entire return. And the cool thing about TurboTax is I do what I call a what if analysis. You can actually do your return, you're all done with it, and say, well, what if I put $500 into an IRA? And then the refund monitor will tumble, for federal and state, and it'll show you the benefit of that. There are various other credits too, earned income credit. Okay, there's a saver's credit. There's other credits. But if you, as Aaron said earlier, we have what we call an interview flow in the TurboTax product, and it'll ask you a ton of questions. And as it's asking you questions, it will reveal extra credits and deductions for you as you move through the process. Eric, did I miss anything there?
No, I don't think so. I think it's just, the big one that gets people to deduct is the mortgage interest, and that's usually the general one. You don't want enough medical expenses to qualify because that's not good. If the limit's really bad, so you're either really, really sick or really, really broke, and we don't want to be either one of those to get a medical deduction. But the mortgage interest is generally the one that will push people over the limit now, since the standard deduction has been raised.
Awesome. Okay, super helpful, guys. That's all I had here for those questions. It looks like we were able to tackle a lot of them in the Q&A as well. If there's anything outstanding, we'll go ahead and stay on the line for a couple minutes to answer a few of those Q&As. But as the folks at Stash have noted also in the chat, we'll be sharing all of this great information with you. Stash is going to be sending an email by Saturday with a link to the recording, and you can see all of our beautiful faces again and go through the content at your leisure.